What is happening, crypto crew? Get ready for a rapid-fire rundown of the news that's shaking up the digital asset world. The market is moving at lightning speed, and if you're not plugged in, you're missing out. We've got massive whale movements, significant corporate maneuvers in the mining space, and even a bold prediction from a prominent figure that's got everyone talking. This is your essential update, the information you absolutely cannot afford to miss. Let's dive in. First up, massive capital shifts are underway as whales are making strategic moves, potentially signaling a major play in the market. We're talking hundreds of millions in Bitcoin changing hands, and the implications are huge. Then, we're tracking a major development in the Bitcoin mining sector, with a significant merger aiming for a prominent stock exchange listing. This move could reshape the landscape for publicly traded miners. Next, get ready for a jaw-dropping prediction from a very familiar name in the business world. He's putting a colossal price target on Bitcoin, and the reasoning behind it is fascinating. And finally, we're looking at the long-term outlook for Bitcoin itself. Is that ambitious price target achievable, or just wishful thinking? We've got the analysis you need to understand the potential. Don't go anywhere, your essential crypto update is right here. Hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat. Whales make strategic moves amidst market swings. Massive capital shifts are currently underway in the Bitcoin market, with significant whale activity drawing considerable attention. A single new Bitcoin address recently received a substantial inflow of 1,506 BTC, valued at approximately $163.58 million. This transaction has ignited speculation among market observers and analytics platforms, with many interpreting it as a potential signal of institutional accumulation or the entry of a new major player into the ecosystem. The address's lack of prior transactional history further fuels theories about its origin and purpose, suggesting a deliberate and strategic deployment of capital. This notable deposit occurs amidst a backdrop of broader dynamic whale movements. In parallel, another significant whale was observed swapping 1,000 BTC, equivalent to about $108.35 million, into Ethereum. This particular transaction highlights the ongoing trend of portfolio diversification among large holders, especially during periods of heightened market volatility. Adding to the flurry of activity, an additional 2,000 BTC was sold by another whale within the past hour, contributing to the overall volume of transactions moving through the Bitcoin network. These movements collectively paint a picture of active capital reallocation by major market participants. Data analytics platform ChainCatcher has underscored the critical importance of on-chain transparency, particularly when such large-scale transfers are occurring. The platform regularly monitors and reports these significant movements, offering real-time insights into the behavior of major holders. ChainCatcher's data indicates that the recent $163.58 million BTC deposit is among the largest single transfers recorded in recent days, underscoring a noticeable shift in how capital is being positioned within the market. Analysts often interpret these substantial movements as indicators of strategic accumulation or hedging strategies employed by high-net-worth individuals and institutional investors. In the current market environment, where Bitcoin's price has recently dipped below the average cost basis for short-term holders, these large inflows suggest a degree of confidence among long-term holders who may be viewing price dips as accumulation opportunities. The increased on-chain activity also provides valuable insights into broader market sentiment. With Ethereum recently surpassing the $4,400 mark, cross-chain transfers and portfolio rebalancing have become more prominent themes. Earlier in the day, a transfer of 774 BTC from the Binance exchange to an unconfirmed wallet was also noted, further contributing to the narrative of active capital movement across different platforms and wallets. While individual transactions do not always directly dictate broader price trends, they undeniably influence market psychology and can signal shifts in investor behavior and confidence. The data provided by on-chain analytics tools is becoming increasingly vital for understanding the macro-level dynamics of the cryptocurrency market, offering a transparent view of how major players are navigating current market conditions and making strategic decisions. But what does this mean for the future of Bitcoin's price action? We're also seeing major moves in the mining sector that could reshape the industry. Trump family affiliation fuels Nasdaq ambitions for Bitcoin miner. In a significant development for the cryptocurrency mining industry, Gryphon Digital Mining, Inc., has successfully obtained shareholder approval for a pivotal stock-for-stock merger with American Bitcoin. This strategic union is set to culminate in the merged entity's listing on the Nasdaq Stock Exchange, operating under the ticker symbol ABTC. This move is further bolstered by a forthcoming 5-for-1 reverse stock split, scheduled to take effect on September 2, 2025. The reverse split is designed to consolidate the company's outstanding shares, reducing them from approximately 82.8 million to a more streamlined 16.6 million. This adjustment is crucial for meeting Nasdaq's minimum bid price requirements, ensuring the company's compliance with listing standards while aiming to preserve overall market capitalization and stockholder ownership ratios. The merger strategically combines Gryphon Digital Mining's established low-cost Bitcoin mining infrastructure with American Bitcoin's aggressive Bitcoin accumulation strategy. The operational expertise of Hut 8 Corp will also be integrated into the combined entity, creating a robust and scalable platform. American Bitcoin, notably linked to the Trump family, is positioning itself as a pure-play Bitcoin mining company, aiming to capitalize on the growing institutional interest in direct Bitcoin exposure. By merging with Gryphon, which already holds a Nasdaq listing, American Bitcoin can bypass the often lengthy and complex initial public offering (IPO) process, accelerating its path to becoming a publicly traded entity. The reverse stock split, while a common practice to meet exchange listing requirements, can sometimes elicit mixed reactions from the market. Gryphon's stock experienced a notable surge of 41% in the preceding trading session, likely in anticipation of the merger's approval. However, following the announcement of the shareholder approval, the stock saw a decline of over 10%, reflecting the inherent volatility and investor sentiment surrounding such significant corporate actions. Despite these short-term fluctuations, analysts generally view the merger as a positive development for investors seeking exposure to the Bitcoin mining sector, anticipating enhanced operational efficiency and potential growth for the combined entity. Post-merger, the newly formed company, which will operate under the American Bitcoin banner, is expected to leverage the synergies between Gryphon's mining capabilities and American Bitcoin's strategic accumulation approach. The integration of Hut 8's operational know-how is anticipated to further optimize the company's performance and market position. This strategic consolidation aligns with a broader trend within the public markets, where companies are increasingly focused on accumulating Bitcoin reserves and enhancing their operational frameworks to navigate the evolving cryptocurrency landscape. The successful shareholder approval marks a critical juncture, setting the stage for American Bitcoin's debut on Nasdaq and positioning it for potential long-term success in the competitive Bitcoin mining arena. This merger is certainly making waves, but that's not the only big news from the Trump camp. We've got a stunning prediction about Bitcoin's future price that's turning heads. Eric Trump predicts Bitcoin's $1 million future. In a remarkable display of confidence at the recent Bitcoin Asia conference held in Hong Kong, Eric Trump, a prominent figure in the business world and son of former U.S. President Donald Trump, delivered a bold prediction. Bitcoin is destined to reach $1 million per coin. This pronouncement was not merely a speculative utterance, but was presented as a reflection of a deeply held strategic vision, rooted in his family's increasing involvement in the Bitcoin mining sector through their company, American Bitcoin. Trump articulated his belief that Bitcoin represents the greatest store of value ever created and the world's greatest asset, emphasizing its profound long-term potential. Trump elaborated on the foundational elements that underpin his optimistic outlook. He presented Bitcoin not just as a speculative digital asset, but as a critical piece of serious financial infrastructure, possessing robust technical and economic fundamentals that position it favorably for substantial institutional adoption. This narrative aims to reframe Bitcoin in the eyes of investors and the broader financial community, moving it from the realm of niche digital currency to that of a foundational element of future global finance. He detailed specific factual elements supporting this view, though the specifics of these elements were not elaborated upon in the provided context. They are framed as key drivers of his price target. Beyond the purely economic arguments, Trump also offered a geopolitical perspective on Bitcoin's burgeoning role. He suggested that both the United States and China are leading contenders in the global cryptocurrency race, a statement that might seem counterintuitive given Beijing's stringent regulations against crypto trading and mining. Despite these official prohibitions, China still commands a significant portion of the global Bitcoin hash rate, a testament to the country's substantial technological capabilities and influence within the crypto ecosystem. Trump specifically lauded China's role, acknowledging it as a formidable power in activity around Bitcoin. This acknowledgement extends to China's advancements in central bank digital currencies, CBDCs, with the digital yuan being cited as one of the most developed projects globally. While estimates of China's direct Bitcoin holdings vary, its technological footprint and strategic involvement remain undeniable. Trump further posited Bitcoin as a potential diplomatic tool, capable of fostering connections between cultures and playing a role in bilateral discussions, particularly between the U.S. and China. He conceded that other priorities might often overshadow this potential, but the underlying conviction is that Bitcoin could serve as a form of soft power or a strategic element in international relations. This perspective aligns with a growing sentiment among certain elites who see digital assets not just as financial instruments, but as geopolitical levers. The association of his family with American Bitcoin, a company poised for a Nasdaq listing, underscores a strategic intent to merge traditional finance, mining operations, and forward-looking digital asset adoption under a unified vision. His prediction is certainly ambitious, but is it grounded in reality? We're now turning our attention to the long-term viability and price potential of Bitcoin itself. Is Bitcoin's $500K target by 2030 achievable? As the cryptocurrency market continues its dynamic evolution, ambitious price targets for Bitcoin are frequently discussed, with many analysts and enthusiasts projecting significant long-term growth. One such prominent projection suggests Bitcoin could reach $500,000 by the year 2030. This forecast is built upon several key factors, including the anticipated impact of Bitcoin halving events, increasing institutional adoption, the growing recognition of Bitcoin as a digital store of value, and its potential role in global economic shifts. The scarcity inherent in Bitcoin's design, with a fixed supply of 21 million coins, is often cited as a primary driver for its potential appreciation, especially in an environment where traditional fiat currencies may face inflationary pressures. The concept of Bitcoin as digital gold continues to gain traction, positioning it as a hedge against inflation and a safe haven asset in times of economic uncertainty. As more corporations and financial institutions allocate portions of their portfolios to Bitcoin, this demand is expected to increase, further supporting its price trajectory. The upcoming Bitcoin halving events, which reduce the rate at which new Bitcoins are created, are historically associated with bull markets as the supply issuance dwindles. The next halving, expected in 2024, is anticipated by many to be a significant catalyst for price appreciation leading up to and beyond 2030. However, achieving a $500,000 price point by 2030 is not without its challenges and requires a sustained period of positive market sentiment and regulatory clarity. Potential headwinds include increased regulatory scrutiny from governments worldwide, the inherent volatility of the cryptocurrency market, and the development of competing blockchain technologies or digital assets. Scalability issues and transaction fees can also impact Bitcoin's usability for everyday transactions, although ongoing developments like the Lightning Network aim to address these concerns. Furthermore, the broader macroeconomic environment, including interest rate policies and global economic stability, will undoubtedly play a crucial role in shaping Bitcoin's performance. Market sentiment analysis and on-chain data provide mixed signals, with some indicators suggesting strong underlying accumulation by long-term holders, while others highlight the sensitivity of the market to macroeconomic news and sentiment shifts. Analysts are closely watching adoption rates by both retail and institutional investors, as well as the regulatory landscape, to gauge the likelihood of such ambitious price targets being met. The path to $500,000 by 2030 would represent a significant increase from current price levels, requiring consistent growth and overcoming potential market disruptions. The realism of this target often depends on the assumed adoption rates, regulatory outcomes, and the overall success of Bitcoin in establishing itself as a mainstream financial asset. So, while the future price remains a topic of intense debate, the current market is buzzing with activity. Stay tuned for a quick recap of all today's top stories. And that's a wrap on today's essential crypto updates. We saw massive whale movements signaling potential strategic shifts, a major Bitcoin mining merger aiming for the Nasdaq, Eric Trump's bold $1 million Bitcoin prediction, and a deep dive into whether Bitcoin can hit $500,000 by 2030. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news needs, hit that notification bell so you're always in the loop, and let us know your thoughts in the comments below. Also, make sure to follow us on all our social media channels to stay connected. We'll see you in the next one.